Okay, last time we talked about CBOT is the oldest futures exchange, and CME recently in 2007 took over CBOT, and CME plus CBOT, they are under the same umbrella known as CME Group, becomes the biggest futures exchange. By the way, in CBOT, there is something called the CBOE. This is an options exchange. Okay, so CBOE is an options exchange, which is the same as CBOT. It's a bit confusing, especially for beginners. And Euronext was made by combining French exchange, Belgium exchange, and Netherlands exchange. And originally it was started by combining French, Belgium, and Netherlands exchange, but then it merged with NYSE in 2007 and become NYSE Euronext. They trade here. A lot of stocks tend to trade, but it's also used for futures exchange. And Eurex was established in 1998 with the merger of Deutsche Exchange and Swiss Options and Financial Futures Exchange. So this is Deutsche and Swiss Futures Exchange consolidation. That's Eurex. And London International Finance Futures and Options Exchange, known as LIFFE, is based in London, but this LIFFE is a part of NYSE Euronext, because Euronext taken over LIFFE in 2002, and this is Korea Exchange. Okay. CBOT was established in 1848, and the first futures trade was a corn. It used to, in early years, it used to trade agricultural commodities such as corn, wheat, soybean, etc. But then gold and silver futures were introduced, and interest rate futures were introduced as well. In 1982, options on futures were introduced. And like I said, CME, which is called Merck, was founded in 1898, but it took over. It merged with CBOT in 2007. And there are two types of trading: open outcry and electronic trading. And traditional futures contract have been traded using this open outcry system. Take a look at this picture. This is open outcry system. People just get together and They are just auctioning. It's multiple auctioning. But these days, this open outcry system, which is this, tend to be replaced by electronic trading, where a computer matches all this buyer and seller's order. Most of European exchange are based on electronic trading, and so is Korean exchange. It's also electronic trading. But in CBOT CME, still we observe this open outcry system. This is a brief history of futures contract. The first future was a corn future in CBOT. Then, thanks to the advice of Nobel laureate economist Milton Friedman, currency future was introduced in 1972. And then interest rate future was introduced in 1975. In 1982, stock index futures was introduced. This is Kansas City exchange. Kansas City Board of Trade, maybe. And then in Korea, 1996, stock index future was introduced, and let me give you an example of typical futures contract. This is a gold contract. Here you agreed to buy 100 ounces of gold. At what price? US dollar $600 per ounce. In this December, this is an expiration. This is NYMEX is an exchange. And then you sell 62,500 British pound at this price in maturity month of March. Okay, you agreed to sell 1,000 barrels of oil at this price in this month. This is futures contract. Terminology. When you take a long position, that means you agreed to buy. When you take a short position, you agreed to sell. In January, an investor enters into a long futures contract, which means you buy this futures contract on COMEX. COMEX is a division of NYMEX, and make a note of this COMEX and NYMEX explanation here. To buy 100 ounces of gold at $600 per ounce in April. So you make an agreement in January and to buy, okay, since you take a long position. At what price? Per ounce $600, but you agree to buy 100 ounces. When you're supposed to buy based on this agreement, you're supposed to buy in April. So when April, if the gold price in April turns out to be, let's assume, this is an assumption, $615 per ounce, then you make a profit because you you agreed to buy